Good morning, everyone. It's February 14th, 2024. Now, yesterday we discussed the bigger picture on how I view markets, auction market theory, Wyckoff, looking at positioning on multiple time frames, that sort of stuff. Um, Today, what I would like to discuss is selecting a product. Now, back in the old days, as far as I know, if you were a trader, you would just trade one stock for the most part, if not exclusively, as far as I know. If you were a trader, you were just trading Palm or BlackBerry or whatever. If you were trading futures, you were just trading the Hogs or SPOOs or the NAS. Uh, Now, I still think that's the case, and I'll give you a personal example. Now, the Nasdaq for me has positive expectancy, is positive EV, expected value, profitability, whatever term you'd like to use. However, the the expectancy, the win rate is worse for me. The profitability is worse for me compared to the ES. And because the ES and the Nasdaq are composed so similarly, they're weighted so heavily in the Mag 7 or whatever you want to call them these days, the FANG or the Mag 7. Um, you tend to be taking trades in similar places, right? If we turn on a chart of the Nasdaq, that's both a 2-minute chart. We can get rid of this all this stuff on the screen. You can see in general is pretty much the same, right? Ramps up, sells off, kind of churns around the open, ramps up, sells off, gets some bids, back around half back, right? IB low, half back, whatever that is. Um, so in general, because these two products are so similar, uh, you would end up having to trade half size relative to just trading one of them. Now, my win rate or profitability or expectancy is actually better on the ES with a lower risk to reward. Reward to risk, I suppose. I make less money for every trade relative to the amount I risk. I take 5 to 10 points and I risk four, or a little bit less sometimes. In this case, it was 3.5. Uh, that was +5 and +9. That was +5. Whereas on the Nasdaq, I will risk about 15 to 20 and take about 40, 30 to 40. Um, However, my net profitability is actually better on the ES. And if I were to trade both products, I'd be trading half the amount of size. And given the math, if you work that out, it actually becomes better to just trade one product, the one that gives you better net profitability if you're able to trade twice the size. Now, let's get into uh, why I believe in trading one ticker. Now, I have a friend of mine. His Discord name is Rift. I don't actually know more than that, but he has been really useful in providing some statistical information. We've been working together on this for a while, and it really clarified why certain tickers will behave differently. And I don't really want to get into the exact details of all these statistics, but um, overall, what we've seen time and time again is that the Nasdaq is simply more directional. If it breaks the overnight high, the opening range high, the IB high, all that sort of stuff, you know what? It probably will just keep trending up in that direction. Whereas the ES, on the other hand, it is much more mean reverty, and this isn't too surprising. Um, the Nasdaq is much thinner. If you look at the top left on each of these charts, you can see right now 1,700 contracts, 1,800 on the ES, about under 1,000 on the Nasdaq trading in this 2-minute interval so far. Um, it's a thinner product, but it's also more heavily concentrated in just those Mag 7 stocks. Whereas the ES, of course, has 500 companies and it's much more widely distributed. It's impacted much more by the Dow and the Russell compared to the Nasdaq. So it's a uh, much less directional ticker. And this sort of gets into how you're going to trade. I'll give you an example. Um, the Nasdaq does really well, in my opinion, for order flow traders, people who are looking at where auctions are being accepted, you'll tend to see those prior auctions hold as support and get continuation from there. Today isn't really a great example. Today's been quite a trappy day. Maybe if we go back to this day, yeah, it's trappy into the close. But typically, typically the Nasdaq will be very. It will it will continue in the directions of the auctions, whereas the ES does quite a bit better by just fading at levels, which is the approach I take. So that's all I really wanted to discuss. I mean, I could think of specific examples. Here's a great one actually. When the Nasdaq has a gap up, and gap ups, at least for me and most people I talk to, uh, means price opens above the prior day's high or low, right? It opens above the prior day's high or below the prior day's low. We're opening outside of the prior day's RTH range for that 9:30 to 4 p.m. range. You'll notice the ES tends to close those gaps quite a bit. Uh, this is actually very contrasting to the NASDAQ, where we don't really tend to close those gaps that often. We'll come, 20, 50 points shy of closing it, and we won't close it. Whereas the ES, if you come within 10 points or so, it probably will close. Um, that's just one example of the Nasdaq. If it gets a gap up, it tends to just continue in that gap up direction. Whereas the ES will oftentimes just end up, it'll be clunky, rotate down, it'll hit a level, rotate down, close the gap. Um, that's all I really had to say on this topic. I thought I'd keep it pretty simple and straightforward. Uh, every product is going to behave a little bit differently. Uh, you can also think in terms of execution. The NASDAQ oftentimes will do very classical chart patterns, and that is why I have it on this high time frame chart over here doing this Wyckoff scheme. Uh, this is a very classic chart pattern. Um, it will make lower highs. Lower highs do sell off. Where is June, July? Here we go. Lower highs, double tops, right? All that sort of stuff. It'll make a lower high, it'll sell off. I believe the S&P at the same time made a higher high and didn't sell off as cleanly. I can't recall, but overall, the Nasdaq is a much more classic patterns kind of thing. Um, if it makes a lower high, it is probably bearish. If it makes a higher low, it's probably bullish. Um, it's pretty simple from that standpoint. ES or the S&P SPY, on the other hand, you will very often see it try and shake people out, and that's why I don't. If I day trade the Nasdaq, I'm much more eager to move my stops. If I see a stop run and then we reclaim a level, I will move my stop to that new low if I'm getting long. Whereas the ES, what I've found in practice is that it's best just leave your stop as is, let it keep running stops, doing whatever it's going to do, and eventually it will turn in the direction if your spot was correct. Um, that's all I wanted to get into is selecting a ticker. If you're a momentum trader, the Nasdaq is probably great. If you're a reversion trader, the ES is probably going to suit you a little bit better. This goes for any stock. You can figure out, if you're a momentum trader, Nvidia is probably a good place to go compared to whatever IBM or AT&T or whatever other rotational, boring kind of stock. Uh, I mean, I'm playing Disney on a very long time frame, but shit like that, Coca-Cola, whatever it is. Not a lot of visuals today for you guys, but that's all I had. Uh, Selecting one product is a part of the puzzle. You need to find something that goes with your style, your approach. Um, every product is going to be a little bit different. The Nasdaq is going to be directional. It's going to be really nice to look at on order flowy kind of charts, in my opinion. Whereas the ES is going to be kind of confusing at times for order flow traders. It's going to be more mean reverty. Uh, that's all I got. Under 10 minutes. Anyway, Maybe tomorrow we'll discuss levels or something else. If you guys have any ideas, I'd love to hear them. Hope this was informative. Have a great rest of your day. Don't get chopped up.